9. Now, we don't do 8 and 9, so you should be smiling on that. We're going to look at 10. And 10, we begin worksheets. And these are my favorite part of all of accounting are worksheets. Now, I can remember a long time ago, I used to hate these things, but now I think they're wonderful. What we're going to do is we're going to do our adjusting entries here. We've learned to, I've kind of left these on here for you. I guess it was a present, but it's going to confuse you if I don't show you what to do with it. So, we have these 3 adjustments we have to make. We've gathered all this information throughout the month with our regular journal entries. We've pulled this off of our general ledger. This is our trial balance. Everything is balanced. We're ready to go. Now we're at the end of this period, and we have adjustments. We find out that our supplies on hand are only $200, and we have 800 listed. So we have to subtract from that. Now, it's an asset, so if I want to subtract from it, I need to credit it, right? So $600, that's a credit to a debit, so that's going to subtract from the supplies, but whenever I do one side, I've got to do the other side to keep it in balance. So I've used up supplies. I need to increase my supplies expense by $600. And that, an expense, has a debit balance, right? So I increase it by debiting it. So that's A. Now we have depreciation expense of $1,100. And depreciation expense is down here. And it's an expense. We want to increase it. So we debit it. Now, what's the other entry for a depreciation expense? We're going to increase the accumulated depreciation. And that has a credit balance. So we increase it by crediting it. See, we're all balanced here now. And we have one more. We have insurance, accrued insurance, accrued interest expense, which means we have interest that we owe, but we haven't paid yet. So now I have to, interest payable. I haven't paid it. There's no cash out on it. It's not even recorded anywhere, other than I know I owe that because of the way the contract's written up. So I have to, number 1, show it as an expense, $400, so I create that, and I'm going to create an interest payable that shows that liability. And those are all of my, whoops, I got that inside there. That might be somewhat confusing. So, now, I have to make sure everything's in balance. That's why we have these adjustments. So if I add this up, it's $2,100, and this is $2,100. Now, we are ready to step over and create an adjusted trial balance. And we do that by, is that kind of confusing? We do that by coming across the columns and seeing if there's any adjustment. There's no adjustment on the cash. There is an adjustment on the supplies to $200. There's no adjustment on the equipment because we never adjust equipment unless we have to take it off the books. However, our accumulated depreciation has increased. It has a credit balance here, I've got a credit here, so that needs to increase to $2,200. My accounts payable, got to get it on the right side. That happens real easy. $2,200. And my accounts payable is a credit, so make sure you get over here on the credit. It has not changed. So that's $500 credit. We have interest payable. We didn't have anything to begin with, but now we have one for $400. So we need to put that on. We have a note payable that didn't change. We have common stock that did not change. So these are our largest transfer. We had service revenue. I don't think we added anything to it, so that didn't change. We did add rent expense that wasn't there before, so that needs to go right here. No, we didn't. That was already there. We added supplies expense of $600. We added depreciation expense. And we added interest expense. Now, if I have not messed anything up, these should balance. And that's why you do trial balances, to make sure everything balances from all of the accounts. This balances, logically this should balance. So that is a worksheet, and that's how you prepare adjustments. And there are 11 and 12 ask 2 questions. What is net income from up here? Very easy to figure now. You have revenues of $13,000, and these are your expenses that you're going to subtract. And you're going to put that down in net income. What are your total assets? Now this is a bit tricky. Okay? Just a tad tricky. These are asset accounts, but remember I said this accumulated depreciation is a contra account to the equipment, so it's also considered in with your assets, and you would subtract that from the equipment to come up with your total assets for this problem. I'll let you wiggle around with that for a while. The next one up is 14. And in 14, what are we doing? What exciting things are we doing in 14? 14, we're looking at journal entries. And we're journalizing adjustments, I do believe. And the adjustments are, okay, you saw how you did it in a worksheet form. Now we're going to do it in the general journal form. So let's just kind of go down. They give you a trial balance, so hang on to that, and we'll go from there. First of all, we've got to adjust all of these. We've got to do these adjustments. So they tell us prepaid insurance still in force is $500. Well, what was prepaid insurance? What was it? It had $3,100 there. So I'm probably going to have to take $3,100 and subtract $500 from it and come up with an expense of $2,600. Is that where that goes? Yes. And I would have to credit prepaid insurance then. How about supplies expense? Supplies used during the month was $600. $600. So you use $600 of that. So that's an easy one. I increase the expense. How about depreciation expense? And of course you're always going to do the corresponding credit, because you're using a double entry system here. You have depreciation expense, and that tells you, it gives you just all the answers. So that increases, also increases your accumulated depreciation. You have a salaries expense. This is accrued. This means the work has been done by your employees, but they haven't been paid yet. So you owe them $700. That needs to be put on the books for the end of the year, or for the end of the period. And you're going to create a salaries payable for when you actually pay them. And finally, you have unearned service revenue, still unearned, is $1,500. So what are they talking about? Unearned revenue account is actually a liability account, which means somebody is giving you money for revenue, but you haven't performed it yet. So it's kind of the reverse. And there's $1,500 left in that account, it has $2,300. So it had $2,300. There's $1,500 left. That means we have earned $800. That has to be put into the service revenue and taken out of the unearned revenue. So those are your journal entries. And of course, again, you're going to have the credits over here. Now you're going to take all of those and transfer them down to the general ledger. This is the your general journal entries. Your journals, just journal entries. This is the general ledger, and this is where your accounts live. So you're going to transfer those down. You'll see we've got cash, we've got accounts receivable. So transfer all of that information down to here and balance it out so you have balances, because you're going to take all of this and transfer it to an adjusted trial balance. You're going to pull all of that information off and create an adjusted trial balance. And that's going to look like, it's very messy to do, so you'll have to do this probably hard copy first. And now you're going to pull off the information and put it here. When you get this all pulled off, when you get all of these totals pulled off, this should balance at $461,500 on both sides. I'm going to let you squirm with that a little bit. Email me with questions about it. You should end up with this. Remember what is an asset and what is a debit. And then you're going to pull monthlies, or you're going to pull off income statements. I've kind of given you the income statement, so you kind of have a running leap at it. It kind of gives you some ideas of what your balances are going to be. And then you're going to take this and transfer it down. Remember, you do income statement, retained earnings, because whatever you come up with here, you're going to take your beginning retained earnings from the first trial balance and add the income and subtract the dividends to come up with the new retained earnings. And then you're going to create this balance sheet. Again, I've given you totals to work with. So see if you can fill in the blanks. Please email with questions or message me with questions. I will be right online the whole time to help you. I thank you. I think that is the tail end of 3.1. I'm sure it is. So, good job.